It is time for money, power, politics. The Dow surged nearly 600 points today, clawing back more than half of Friday's losses after the president threatened new tariffs on China. By Sunday, President Trump appeared to have backpedaled and changed his tone a bit, writing in a Truth Social post that trade relations with China, quote, will all be fine. Treasury Secretary Scott Bessent also seemed to soften his rhetoric toward China today, saying both countries are in talks to de-escalate the trade war now emerging over rare earth minerals. I want to welcome Bharat Ramamurthy, former National Economic Council Deputy Director and author of The Bully Pulpit on Substack, and Max Chafkin, Bloomberg Businessweek journalist and host of Bloomberg's Everybody's Business podcast. Bharat, I'll start with you. When Trump says it will all be fine, investors jump and just believe him. Why is that?
Well, we're in this weird situation where Trump tweets out negative news about the market loses $2 trillion in market capitalization, and then he walks it back and it regains about $1 trillion in market capitalization. This is now part of a broader pattern where Trump will threaten kind of extreme tariffs and other economic measures, and the market reacts very strongly, only for him to walk it back. And I think the smart investors are starting to realize that that walk back is going to happen every time. But I think the real key is all of this back and forth. The stock market is kind of a side issue. It's crushing certainty in the real economy, and it's really chilling investment. Imagine if you're an investor who's trying to make a multi-million-dollar investment decision based on what you think tariff policy is going to be in the United States, and it changes on a 24-hour basis based on some tweets that Trump puts out on his own social media network. It's impossible to make these decisions, and that's why you see this big freeze in investment across the economy.
Max, the reality is the tensions between us and China are still very much present. These new port fees go into effect tomorrow. So what should your everyday consumer, everyday American expect now?
I mean, I think Bharat's right. Regular consumers sort of don't know what to think. We have the president, making these kind of bellicose threats one day, then doing the old, it'll all be fine the next day. Also seeing kind of mixed signals out of China where they are sometimes saying there's going to be huge export controls, sometimes saying, oh, nothing's going to change. And so we're in this really uncertain situation. Meanwhile, prices are going up slightly. There are additional tariffs coming. So it's just a situation where I think both consumers and businesses are in a position where it's hard to plan for the future.
Bharat, how do you see American consumers being impacted in the coming days and weeks?
Yeah, to that point about inflation, I think it's important to remember that the trend on inflation now is very bad. You look back over the last 4 or 5 months, it's gone from 2.3 to 2.6 to 2.8 to 2.9. It's moving in the wrong direction, away from the Fed's target of 2%. And consumers are feeling it. If you look at the data from the second quarter of this year, I thought it was fascinating that the top 10% of households, the richest 10% of households, are responsible for 50% of the spending in the U.S. economy. That's the highest it's ever been recorded since we started collecting that specific data. So you have this very top-heavy economy where we are relying largely on spending by the very richest households and a bunch of spending from a handful of tech companies on AI, and that's keeping the economy afloat. Basically everything else, manufacturing investment, spending from the bottom 90% of households, is in really pretty bad shape.
Max, to that point, economists surveyed by the Wall Street Journal say a new economic divide is emerging. They see prospects for U.S. growth looking up while the labor market is weakening. What is going on here?
Well, yeah, I mean, part of that is this AI story. And another thing that happened today that caused the markets to go up is there was another big, multi-billion-dollar investment, involving OpenAI and Broadcom. You saw a huge stock movement in AI stocks. You have a bunch of technologies that present very uncertain labor market, to say the least. Now, even if you don't buy the story that AI is going to take jobs, these technologies aren't necessarily creating tons of jobs. So you have kind of a financial boom, a bunch of stocks that are going up, the crypto market doing super well. On the other hand, you have all this uncertainty, businesses not sure they're able to hire, consumers not sure if they should spend, what the price of a given good is going to be tomorrow. And that is causing this kind of bifurcation that you're talking about.
And Bharat, for Americans who are hearing that an AI bubble may sort of in .com fashion burst at some point, how concerned should they be? And I mean, for everyday, regular folks who are looking at their 401ks and seeing the extent to which these tech stocks are critical to that, do you think there's a real concern here?
Yeah, I think that there's growing evidence of some frothiness, as they would say, in the AI market. There are massive sums of money being invested. As I said before, that's really propping up a lot of the top line economic data. And without that, we'd be in rough shape. So even without the bubble bursting entirely, if it just, I don't know, softens a little bit, that's going to take a big chunk out of the economy. And look, it's kind of like you're hurt either way if you're an American worker. If AI goes gangbusters, the reason that it's going to create big profits for those companies is because it is going to be replacing human labor. If, on the other hand, the bubble pops and it doesn't turn out to be that promising of technology, then you're going to see a big slowdown in growth and productivity that's also going to end up hurting the American worker. So the point is, we should be looking for ways to stimulate the real economy just beyond AI and do so in a way that actually redounds to the benefits of American workers.
What should we make of JP Morgan Chase saying they're going to invest $10 billion into industries critical for national security? Quote, we no longer have the luxury of time. America needs more speed and investment in this area. What more should we know about this?
Well, look, I think that it's a promising thing. It's always good to see more money going into American industry. It's not particularly new to see these types of investments. In the Biden administration where I worked, we saw very large investments, both from domestic companies and from foreign companies in the U.S. The key is, without more certainty, it's not clear to me where all of these investments are going to lead. And you can put a lot of money out there, but if people aren't going to follow through and build that factory in the United States or bring on thousands of new workers, we're not going to actually see the benefits of that. And again, to go to the labor market point, this is the worst time for hiring in the United States since 2008. And I think we all know what was happening in 2008. The labor market is really stuck. If you have a job, you're probably in decent shape. You're not likely to lose it. But if you're looking for a job right now, it's one of the worst times in recent history. And so it's a precarious position. What I would call it is an unstable economy, a very top-heavy economy.
Max, I want to ask you, this has gone a little bit under the radar this week, but the Salesforce CEO, a previous supporter of Democratic causes, telling the New York Times that Trump should send guard troops to San Francisco. What did you make of those remarks? We talk a lot on the weekend show that I host about the sort of creeping authoritarianism and the consolidation of business interests alongside that as well. Do you see that as being in this framework? It
felt very similar to Tim Cook presenting Donald Trump with a little bauble at the White House, an effort, I think, by Mark Benioff, who was, if people remember, he was like a prominent Democrat, prominent advocate of taking money and investing in homeless shelters and things like that.
Right.
And now coming around, as you said, to this sort of much more conservative, arguably, authoritarian idea of bringing federal troops into an American city.
After the images we've seen this week out of Portland and Chicago.
And I think he was doing this thing that basically all of these executives have been trying to do, which is find ways to flatter Donald Trump. And I think that is, on one hand, maybe that makes you feel better because maybe Mark Benioff doesn't truly believe that federal military should be on the streets of San Francisco. He did kind of walk it back, sort of, or try to do a little damage control on social media over the weekend. On the other hand, it's kind of damning to see these people who we thought of and who presented themselves as these independent voices suddenly essentially marching in lockstep with an administration that has been at various points seeming to try to bully them, right? And so you've seen critics talk about, CEOs bending the knee and things like that. Certainly, they're not leading.
So for people concerned by these remarks, their best hope is that he's actually just playing a character to try to get along with Trump.